So, before beginning, I hope you are doing well and excited for today's session. It is my pleasure to introduce our speaker for today. So, Mr. Pradeep Khetan is a highly effective professional with a thorough exposure to the concepts of supply management, customer and supply relationship management, operations, and supply chain management. In his career of more than 30 years, he has had very wide and deep insights of business problem of more than 70 companies in India and abroad in all kinds of manufacturing and business services. He possesses very problem solving skills and leads people towards change through his impressive business knowledge, management knowledge, high technical knowledge, understanding of human issues, and confidence built over the years. He is a director, Western Region of Institute of Supply Management, India, that is ISM India. Regarding his education, he is Bachelor in Science. He is Certified Professional in Supply Management, that is CPSM by ISM USA. He is international. He is having International Diploma in Supply Chain Management (SCM) from International Trade Center. He is having Certified Fellow in Production and Inventory Management (CFPIM) EPIC by EPICS USA. He is also having Certified Supply Chain Professional (CSCP) by EPICS USA. So he is also having certified in transportation logistics, that is CTL by ASTL again by USA. He is also having professional designation in logistics and SCM PLS by AST and L again by USA. Regarding his experience, he is having more than 25 years of experience. He is associated with various US based professional bodies like ISM, EPICS, and ASTL. So, without taking much time, let's welcome our today's speaker and begin this session. Over to you, Pradeep, sir. Thank you so much.
Okay, thank you. So let's think about the cost and price management. Nowadays, if you go and check in your own organization, a lot of new initiatives are happen in cost saving. A lot of projects are continuously working in the organization, and most of them are talking about the cost saving projects. Now, what is cost saving? Cost saving is very simply like a reduction in the expenses achieved by improving efficiency. So how you can achieve the reduction of expenses? Now expenses are fixed. Now you want to reduce the expenses. So how you will reduce? Either you can increase your efficiency. Like take example, in most of the organization I have seen what they have done. Like initially, suppose you talk about the P2P cycle, lot of activities are involved in that. Now, maybe they removed few of the activities, and because of that, they improve the efficiency of the procurement department, and by that they can save the cost. Okay. Then another thing is like important for cost saving is the you can negotiate better than what you have done earlier. Now, how you can do the negotiation better? So a lot of companies nowadays, like they are asking for the CPSM certified professional. Why? Because they know very well what is the value of negotiation in the organization. And they know very well what is the best way to do the negotiation. And third is a very important thing is eliminate unnecessary spending. Now, unnecessary spending means what? Anything which is not adding value for the customer, that is considered as the unnecessary spending. Okay. Now take example, counting the output or material which you are sending to the customer or you are getting from the supplier. Now counting is not adding value for the end customer. That means it is totally waste. So how we can eliminate this unnecessary process? And by eliminating unnecessary process, we can eliminate unnecessary spending also. So when we are talking about the cost saving projects, mainly we are talking about the project for process optimization, where like we can streamline the workflow to reduce the waste and time. Now, a lot of activities we are performing, which is totally waste for the customer. Sorry. Negotiation. See, negotiation, generally we are thinking very simply like, okay, it is we are negotiating the price. We are talking about how you can reduce the price. No, that is all not the negotiation. That is just the one part of the negotiation, which is called bargaining. But negotiation is much in detail. So we are not getting only the best price, but we are also getting the best deal with the supplier, and we are also getting the best service from the supplier. Then another way of reducing the cost is like the automation. Now, very simply, like if you consider like 20, 30 years back, how people they were doing the procurement or purchase. Like everything was manual. Like in procurement department, approximately like 60, 70 people they were sitting and they were doing the complete procurement process. Now, a lot of activities are automated. And now you can find like in a department, hardly two or three people are sitting and entire procurement they are taking care. And not only they are taking care entire procurement, but the level of procurement is very high as compared to the earlier. So there's a good benefit we are getting because of the automation. A lot of new technologies are there available, and we are putting this technology in place, and we can do a lot of automation in the system. Then we can do the bulk purchasing. Again, like it is the we can do bulk purchasing only through the automation. So we can identify like which particular product spend is high or low. So we are doing spend analysis. A lot of the new tools are available for spend analysis, and because of the spend knowledge, we can go and take the advantage of the scale, and we can get the bulk purchasing. Now, cost saving we can do in two ways. Either we can go for the cost reduction or we can go for the cost avoidance. Now, what is the difference between these two? We will see in the next slide. And we have to add another thing which we want to know, like which is the direct cost, which is the indirect cost, and which cost we have to take care for reduction of the cost. Okay. So cost reduction is very simply like whatever is the existing cost, how we can reduce the existing cost. It can be you can use for capex or it can be for opex also. One of the way of reducing the cost is like doing the spend analysis and going for the mass purchase from one to supplier. And because of that, like economy of scale, you are getting a lot of benefit in the cost. Another way is like doing the best negotiation, and by doing negotiation, you can reduce the cost, and there's a net saving for the organization. But very important to understand, like when we are talking about cost reduction, it should be not for the short term; it should be for long term. Otherwise, there is no meaning of doing the cost reduction. Okay, like when we are doing the saving or we are doing like mass product purchase and getting the economy of scale, then we are not planning for the short term, we are making for the long term. Okay. So simply example I will share with you is like if suppose you can eliminate the waste. Now, what is the waste? Waste can be anything. It can be waste of the material, it can be waste of the process, it can be waste of the steps. Anything which is not like even like knowledge is also waste when it is not used by the organization. Okay. So suppose you are doing CPSM and after that like you are not using your knowledge for your organization, then it is totally waste. Then if suppose you are doing the modernization of the system, then because of this modernization, the efficiency is improved, and then like output rate is also improved. and because of that, the cost saving is there. So a lot of this various ways are there. Even like negotiation is one of the way we can reduce the cost. Another way is like the cost avoidance. Like cost avoidance refers to the preventing future expense from occurring by taking some action. While cost reduction is the current cost we are reducing, cost avoidance is for the future cost we are talking about. So we are taking some step, we are taking some action, and because of that, we are avoiding the cost of to occur. That is called cost avoidance. It is like when in the particular in costing, we are talking of it as a soft saving. What is the difference between soft saving and hard saving? Hard saving is like something which we can easily identify in our balance sheet, but cost saving will never be identified from the balance sheet, but it will happen for your organization. It is like forward-looking, preventive. Like very simple example, I will share you with which you can be like a very easily understand. Preventive maintenance. Now, when we are going for the preventive maintenance, can you identify very easily like what is the saving you are going to make because of the preventive maintenance? Maybe not. But because of the preventive maintenance, we are reducing the breakdown of the machine. We are reducing the delay in the production. And because of that, a lot of savings are there. Even like when we are going for the training for the employee, like take example, you people are sitting and you are attending this webinar. Now this webinar, or because of the training, people they are getting the understanding of the subject, they are getting understanding of the condition, and maybe possible they can when we implement in the organization, they can improve the process, right? Then by doing the smart planning, you can avoid the future problems. Like take example, when we are talking about the IBP, we are talking about the master scheduling. If suppose you are doing very well the planning, I'm giving 100% confirmation like there cannot be last minute purchase, last minute production planning, and nothing is like that. And investing upfront, spending now to avoid large costs later. So a lot of companies, what they are doing, like today, they are spending a lot of money in technology so that they can avoid the later cost. Okay, there are a lot of examples of like Walmart and Kmart. Like Walmart invested a lot of money in the future technology, and because of that, like they were able to save a lot of money, and they were very competitive in the market. On the other hand, like the other company Kmart, unfortunately, they are not spending money in their technology, and because of that, they were knowing in the market. Okay. When you are going and like it is a very big project work, so you are going the cost control program, you are having your organization. What are the issues? What are the points you have to keep in your mind? First, a very important point is that you should be clear objective in your mind. What is my objective of this cost control program? My objective is like cost reduction by 10%. Or my objective is like improving my process by 20%. What is my objective of this cost control program? And generally, like in most of the organization, this objective is missing. And because of that, they are finding a lot of difficulty. So this is a very important part. Then the data quality and visibility is another very important issue for any project to be successful. In companies, a lot of companies like they have the incomplete data or outdated data, a lot of data cleansing data modeling is required. Lack of real-time tracking is another issue. You should be very careful and very like you get 100% sure there is a real-time tracking possible. And some companies they have the disconnected system across the departments. So this is not the right way when we are going for the cost control program. So we have to make sure first our data should be complete and current data. There should be a real-time tracking and all the systems with all the departments are connected with each other so that you can get the data very easily. Third and very important thing is the weak leadership support. See, any project when you're talking about is successful when and only when the leadership is involved in that. Otherwise, it is not be possible to make the success of any project. Okay. Then a lot of companies when they are going for the cost control program, their main target is cost cutting. No, it is not the right way. Yes, cost cutting is one of the target, but it is not the only target for us. So we have to make sure when we are going for cost cutting, there should not be any compromise in the quality, any compromise in the customer experience, right? Then somebody should be accountable for the entire program. In the organization, when we are talking about cost cutting program, unfortunately, nobody is accountable for that. There's another thing we have to keep in mind. Then there should be adequate tools and systems should be available so that we can do it properly. Nowadays, like a lot of these softwares are available and they can help you to achieve this cost cutting program. Your focus should not be short term. Please keep in mind, it should be long term focus, and poor communication is another very important point we have to consider. Mostly like in the organization, the employees they're not having the good communication. So we have to make sure everyone is having good communication in the organization. Okay. When we are talking about communication, it is related to business, not related to chit chat, right? Then another thing is as I say, our goal should be long term, not short term. Like the particularly when we are talking about the cost avoidance, it is very difficult to calculate the number because it is not visible very easily on the balance sheet, right? So how we can do the measure of this type of this is very important part. Then we have to make the standard program. So because of that, we can eliminate a very easily variation in product and service. And another is we can get a lot of benefit because of the economy of scale. So use more and more standard products, and there should be a flexibility in the design also. Okay. No, another thing is about the value analysis. A lot of companies they are talking about the what value you are adding for the product. So how you can define the value? We can define value very simply: function divided by the cost. Whatever we are paying for the product or the service and what we are getting against that. That is talking about the value. Sometimes we purchase a product where function is lesser than our requirement, but cost is equivalent to our requirement. Then maybe we can say a value we are getting is not up to the 100%, it is less than 100%. But sometimes function is far ahead of the our requirement and cost is equivalent to our requirement, then we can say it is a value added proposition for our organization. So now how you can do the value analysis? So we have to eliminate unnecessary expenses. To eliminate unnecessary expenses, we have to eliminate unnecessary process. Okay. Incorporate new technology in our organization. Whenever we are talking about new technology, we have to do the value proposition for the new technology. What is the cost of the technology and what is the benefit we are going to get from the technology. I will share with you like a lot of companies, they purchase IBP, and before IBP there was another software was there from many software service providers, and that was related to this capacity planning, and most of the companies, they purchased the software, but they unfortunately not implemented it properly, or they not implemented at all. There is a total waste for the organization. So make sure like whenever you're talking about the new technology, we have to incorporate in our system. First, you have to understand what is the value proposition of new technology. And after that, you can decide to go for the incorporation. Compensate for initial over or under design. Remain competitive in the market. The very important question we have to ask is like, can the part be eliminated without affecting functionality? Because like we say like, okay, remove this part. Okay. But whether this removal of the part will affect any way on the functionality or not. If it is not affecting the functionality, we can continue it. Can a design be modified to obtain more versatile or multifunctional parts? Can we use materials that are available in greater supply or which can cost less to my organization? So we have to do value analysis very carefully, and a lot of time people, they are spending a lot of time and effort for doing this value analysis. Another term is value engineering. It totally differed from the value analysis. Value analysis is talking about the existing product, while value engineering is talking about the new product, or sometimes like we are redesigning the product. So after redesigning, the product will become the new. So we are talking about that type of product, process, or services. When we are talking about the value engineering, we can just talk about the changes brought about the design specification. Suppose we are substituting some of the part, then what is the value addition we are doing after doing the substitution? Then a lot of standard items we are using, changes in the process techniques, changes in the equipment or material. All this are like we are doing, and because of that, what the value addition we are doing in our item or our end product is what is value engineering is. Then like we have to know the value of cost modeling. Cost modeling is nothing but is the process of estimating the expenses involved in producing the product, delivering the service, or running the project. So a lot of ways are there like to do the cost modeling, and a lot of uses are also there. When you are doing the cost modeling, very important, one important thing is for you to understand what is the cost driver for your organization. Like take example, if you are purchasing any raw material, in this raw material, what is the cost driver? If you are able to understand the cost driver, then you can do very good negotiation with the supplier. Okay. A lot of cost modeling models are there. One is the bottom up costing, where like we are talking about the all the lowest level purchase raw material, and then adding all the cost of converting it to the next level product, then converting it to next level sub-component, then component level, and then from that, that is the finished product we are making. So we are doing it the exercise of bottom of costing. There is also a similar top-down costing method. Now, difference between two is like this bottom of costing is very detailed and time consuming, but it gives a very accurate result. Top-down costing is comparatively very faster, but less precise. And a lot of companies they prefer to go for activity-based costing. So each activity we are performing, they are considering the cost of the each activity, and then they are accumulating all the costs. That is called activity-based costing. So for organization who are dealing with the complex operations, activity-based costing is a much better option. For organization who are not having the complex operation, comparatively very easy operation, they can go for the bottom-up costing or top-down costing. It depends on like how complex your company's system is. Then standard cost, before going for the any product, we are talking about the cost of the products in the mind of the people. And there is also standard cost. Standard cost is nothing but is a predetermined estimate of what product or service should cost under normal condition. So we know like during the actual performance, there can be a variance. But at least when you are like going for negotiation, now how you will do the negotiation of the standard product? So you have to some predetermined estimate should be there in your mind. And that is what is the standard cost is there. It is widely used in accounting and costing system, and it is used for the comparing the expected cost with actual cost, so that we can easily identify what is the variance in the system. Generally, standard cost we are using for evaluating the bids or generally for negotiation purpose also. Okay. And also it is very useful for establishing budgets and planning, simplify the performance evaluation. For pricing decision also, this is very important, and like a lot of cost control programs are happening. For that also, we are using the standard cost. Also, we are talking about the product cost roll-up margin. You know very well what is the sale like revenue minus cost of the product is what is called as a margin. Contribution of profit is nothing but is the sales minus variable cost. Preventive cost of quality is like when we are talking about cost of quality, it defined in the various ways, and very easily we can identify like cost of prevention, cost of appraisal, cost of internal failure, cost of external failure. So if suppose we consider like okay, cost of quality, why we want to pay amount for quality? So if suppose there is a we are putting all quality efforts in place, and there is a no failure, then we what cost we are saving? The cost of prevention is what the cost we are incurring for quality management, and by that you are preventing the failure. There is a cost of prevention. If you are not doing that, then you need to do quality check. There is the appraisal. All the companies are having the quality check department, QC department, and that is called the cost of appraisal. So continuously we are monitoring the product. We are monitoring like the characteristic of the product, the number of output of the product. All these are the appraisal. And then is the internal failure. Sometimes like during the appraisal we identify this is the failure of the product. So already the product is ready. Now it is a failure is there. So we have to correct the failure. And what is the cost is incurred? That is called internal cost of failure. And external failure cost is very, very high. the product is going to the customer and they identify the problem, the customer side product is failed. So entire product is coming back to your organization, and then customer is also facing the problem. So there are also like a lot of this contracts points are there involved in that. So we have to be very careful for external failure. Then cost of inventory. Uh, when we are keeping inventory in our organization, what is the cost? So there is a cost of opportunity. The amount we are investing in inventory is suppose we are not keeping the inventory, the same amount we can use for some other activities. So minimum opportunity cost is equivalent to what the bank interest is there. Okay. Then storage and handling costs, taxes we are paying for the inventory, insurance we are paying for the inventory, then shrinkage, obsolescence, pilferage, all these are the cost of keeping the inventory. Okay. And if you see like in the organizations, routinely it is 15 to 18% of the average inventory is the cost of inventory. So cost is very high. So it is always like preferred to reduce the inventory because like when you are reducing the inventory, it improves the cash flow. At the same time, it also reduces the cost of inventory. Another intangible cost. Now, basically three types of costs are there. One is the purchase cost or the production cost. Now, what is the purchase cost or production cost? There is the direct cost when we are talking about the purchase of the product or when we are talking about the production of the particular product or services. Okay, but that is not the complete cost. There is a very small portion of the cost. Then bigger than this is the landed cost. And then bigger than landed cost is the total cost of ownership. The purchase cost is very clear now. Like take example, we are going and purchasing the product. They're talking about okay, it costs you $3 per piece. So that is the cost of the purchase. Okay, but what is the landed cost? Landed cost is the total cost of product once it has arrived at your location. That means it includes only the cost of product? No, it also includes the expenses incurred in bringing it from the supplier to your warehouse or your doorstep. In other words, we can say it can answer what did this product actually cost me to receive. That means we want to make sure the costs include all the costs till the product is reached to your destination. That means it includes the product cost, it includes the shipping and freight cost, it includes the custom duties and taxes, it includes the insurance, it includes the handling, port charges, currency conversion costs, all these costs is included in that. Okay? So when we are talking about the product cost, we are talking only just the first part. But when we are talking about landed costs, we are combining the other costs also. And third is the total cost of ownership. Now, total cost of ownership is the acquisition cost, operating cost, because acquisition cost is the landed cost, okay? But more than that, the cost of operating the product or services, maintenance costs, support costs, downtime costs, and disposal costs. All this cost is included, and that is called the total cost of ownership. So important thing is like for procurement is whenever you are procuring the material, don't procure the material only on the basis of the product price. No. Whenever you're procuring material, you procure the services, procure on the basis of total cost of ownership. Generally, TCO we are using most for capex, but it can be used for the opex also. Okay. And for OPEX, mostly people, they are using the landed cost. So production cost or purchase cost should not be there in the system. We need to concentrate more on landed cost or TCO. Like example, here we are talking about buying the machine. So purchase price is given, operating cost for 5 years is given, and maintenance cost is given, and disposal cost is also there. So total cost of ownership is the purchase price plus operating cost plus maintenance cost plus disposal. So we consider here like this machine will be used for only 5 years. That's why we are considering the operating cost for only 5 years. Okay. Mostly it can be used for the procurement of IT and asset management, where the cost is very high and difficulty is there. Now, what is the direct cost? Direct cost is like something which is directly going in the material or in the services. Like take example, when you're talking about manufacturing, it is called the direct material, direct labor, and maybe factory overhead, manufacturing overhead. Like we are talking about the equipment operation cost of the equipment, okay, and other production costs like any cost other than what is written here related to production, it happens, then it is considered as a direct cost. Now, direct costs always vary with the production. If production is more, then direct cost will be more. If production is less, direct cost will be less. It generally used for the pricing decision and also like to identify like if you can point to a cost and say this belongs to this specific product or job, then it is direct cost. So very clearly you can identify which costs belong to which particular product or job. And indirect costs, not directly related to the specific unit of output, unlike the direct cost, it is related to overall normal operation. That's why it is called overhead. Indirect costs, maybe like utilities, office supplies, office technology, marketing campaign, insurance costs, employee benefits, and all these are costs are coming under the overhead. And overhead is what is called as indirect cost. Now, what is the fixed cost? Fixed cost is expense that remains constant regardless of the level of production or sales. Like, take example, if you're talking about the rent of the premises. Now, rent of the premises is fixed cost, whether you're producing any product, any service or not. Irrespective of that, your cost is fixed. Okay. Salary of the staff, whether you're producing anything or not, you're giving salary to the staff. Insurance premium, depreciation of the machine, property tax, all these are the fixed costs. And this is very important for break-even analysis. Whenever we are doing the break-even analysis, we have to consider the fixed cost and variable cost. Okay, and it is also important for the pricing of the product. So when we are doing the pricing of the product, we are talking about the what is the fixed cost and what is the variable cost. Okay. Variable costs are expenses that change directly in proportion to the level of production or sales. The more you produce, more this cost increase. If variable costs consider like raw material, direct labor, packaging cost, sales commission, because like sales people's salary is different than the commission we are giving to the sales people. Okay. It also helps in pricing decision because like we are, as I told you, like when you are doing the pricing decision, you have to consider our fixed cost and variable cost both. And it is very important to understand our profit and contribution analysis, and very important for the break even. Now, one thing is in the mind of you, like you must be thinking of like how this direct cost is different than variable cost, because both are very similar. So the difference between those two is like direct cost is based on the traceability, that means in which product what are the material is going is the what is we're talking about the direct cost. So you directly can say like, okay, in this product, this material is there, that means it is a direct cost. While variable cost based on the behavior, that means it changes with the output rate. If the output is 100, the variable cost will be different. In output is 1,000, then variable cost is also different. So there is a slight difference between the direct cost and variable cost. And for our purpose, we need to understand both direct cost and variable cost. Some costs are semi-variable, like take example, electricity. Now, one electricity we require for the operation of the premises, and another electricity we want for the manufacturing of the product. So for management of the operation of the premises, whatever is required is the fixed electricity charges, and variable charges are what is for the per unit production of the product. Okay. Similarly, like we are having the salary also fixed and variable. A lot of costs are there, like which we can consider like a fixed cost and variable cost. Then carrying costs, yes, we also covered. So the carrying cost is very simply defined as like total carrying cost is nothing but it is the divided by average inventory value multiplied by 100, or simply carrying cost per unit is the cost per unit multiplied by carrying rate. So as I told you, like in the organization, in the companies like throughout the world, people they are always like suffer because of this carrying cost, and they want to make sure like this carrying cost should be lower. So currently like 15 to 18% is the carrying cost in average carrying cost in the industry. So like as you know like very well like the carrying cost is very important for us to optimize inventory level, because like if inventory is more, then carrying cost is more. Reduce the unnecessary storage expenses, improve cash flow. All these are the benefit of the talking about the carrying cost. Now, what is the should cost? The minimum cost for making a product or services. That means it should be there in the cost. So it answers very simple question: what should this product really cost to make? If suppose I'm saying okay, minimum this is required, that is the should cost. It is one of the modeling technique is there. And even like when we are going for negotiation, we can first consider what should be the should cost, and accordingly we can negotiate with the supplier. So in should cost, when we are doing, we can do the breakdown. We can talk about the material cost. We can talk about the labor cost. We can talk about the labor overhead cost, profit margins. Okay, and then we can define it is the should cost. Now, if suppose you are knowing what is the should cost, and if currently what the cost we are incurring, you can easily identify what is the variance in between these two, and that is what is the we can say it is cost saving opportunity for the organization. Okay. Then target cost. Target cost is nothing but target selling price minus profit. So sometimes like what people they are doing, They're talking about what should be my target cost of making the product. Okay, but how you can reach to the level? So design a product that provides the features and price demanded by the customer. That is what is the customer is ready to pay, not what is we are going to incur. We are not talking about what customer is ready to pay. Second step is determine the company desired profit. Now, if suppose you're talking about my product is there and customer is ready to pay $10. And what is my company want margin is $2. So $10 is what customer is ready to pay. What my margin my company is required is $2. So my target cost should be $8. So derive the target cost by subtracting the desired profit. Step 2 from desired price. Step 1. And engineer the product to achieve the target cost. That is a very important part. Okay. Then the relevant costs. A lot of costs are relevant, like future cash flow, avoidable costs, opportunity costs. Then irrelevant cost is sunk cost. Now, why this future cash flow is a relevant cost? Because like whatever cash flow is happening in our organization, that is making impact on my organization operation. That's why it is relevant to my organization. Then whatever cost we can avoid, okay, that is also making the impact on my operation. And opportunity cost, again, it adds value for my organization. So that's why it is all relevant cost. Why the sunk cost is irrelevant? Because it already happened and they're not affecting the future cash flow. That's why we are not bothered about that. That is irrelevant cost. Committed cost, already we committed. So why we should bother about? It is not going to make impact on future. Non-cash expenses like depreciation. Now depreciation already is there, but it's not making impact on my cash flow. So that's why it is called as a. So any cost which is making impact on my cash flow is a relevant. Any cost which is not making impact on my cash flow is a irrelevant cost. Overhead, all the expenses which are not required for the operation, but that is required for other activities, that they call the overhead cost, like rent, utilities, insurance, office supplies, travel, and right? The simple way to calculate the overhead cost, the income is 30,000. These are the various area where we can incur the overhead. Total is 1800. So 1800 on 30,000 income. That means 6% is my overhead expenses are there. How you can allocate the overhead cost? It depends on your company's requirement. Somebody like on the base of direct labor cost, somebody on the machine operating hours allocation.
Hello.
Yeah, you are able to see this screen?
Yes, sir. Yes.
Yes,
Carry
sir,
on.
we are able to see your screen.
Okay. So allocation can be on the basis of direct labor, can be on the basis of the machine operating hours, maybe on the basis of the GSA cost, or maybe on the basis of the activity-based costing. Okay. So it depends on like how company, every company has the different concepts in their costing method. So depending on their costing method, they can define how we can allocate the overhead cost. Then opportunity cost is there, the cost allocating fund one business opportunity rather than another. So any like amount we are investing and suppose we are getting good opportunity, then we can talk about the what is my opportunity cost. So what is my rate of return? A lot of time like when we are doing the business, in business we are talking about like in this particular type of business we are not making the profit, or like type of profit we are expecting, and there's an opportunity in other area. So why not we can close this type of business, or we can reduce the business and try to get into another business. Okay. Like Reliance is thinking about like they are not getting the required profit in oil and oil business. So they are slowly diverting themselves like in other type of business, service industry, and this is where they are finding more opportunity. Then this is like how you can see the health of your finance. So you can go and check the gross profit margin, then operating profit margin, return on investment, then return on asset employed, return on total asset. All these are like various analysis are there which you have to do, and you have to identify like how we can go and do the procurement for the product. Also, like a very important part, I'm not sure like how many of you are really aware about the this financial terms like cash flow, balance sheet, profit and loss statement. Because like whenever I'm going and doing the training program, I'm asking the people like how many of you are aware of reading the balance sheet properly? How many of you are aware of like how to read the profit and loss statement? And 99% people they say no, we are not aware because we are the engineers. So why we are supposed to know this? This is the requirement of uh, accounts people or people with the knowledge of finance. But no, it is very important for you people also. So you should know how to read cash flow, how to read balance sheet, how to read profit and loss statement, because whatever you are doing, it is directly reflecting in this three area.